Okay, can you all hear me? Okay, thank you. So the game plan is I'm going to present a bit on Chapter 1 of the World Economic Outlook, which just you can download in this age of connectivity for free on the IMF's website if you're interested. And in this Chapter 1 of the World Economic Outlook, we really kind of give a broad overview of what's happening, what's happened in the world, where we think kind of the world could be going, what are the risks, and what are some kind of broad policy recommendations. And so what I'm going to talk about in this kind of outlook component is broken down into these four things, namely a little bit on recent market developments, a bit on what the outlook we see for 2011, 2012 is going to be, discussion about some of the risks, and then some broad policy recommendations in light of these risks. So let's take a look. So this is the kind of slide that kind of summarizes everything about this chapter. So basically, we see the recovery in the wake of the financial crisis is solidifying, but it's going to take some time before it significantly lowers unemployment. Related to this, there's a variety of old policy challenges that have been around for a while, but they still haven't been sufficiently addressed. So in particular, there's been insufficient fiscal adjustment and financial repair in advanced economies. In part, this is a function of the fact that many of these economies entered in or experienced the financial crisis with not terribly strong balance sheets. And then the financial repair, it's proceeding but not as quickly or as thoroughly as we would like. And then there needs to be this rebalancing of external demand, in particular amongst key Asian surplus economies. This is this kind of imbalance in external demand where we have had a group of countries that have had persistent current account deficits for quite a while, and then a corresponding group kind of on the other side that have had persistent current account surpluses. And these need to kind of rebalance, basically, in order to minimize risks going forward. So in the wake of kind of new developments, there's some new policy challenges in addition to these old challenges. The new challenges are we see some evidence of overheating in many emerging market economies and high commodity prices, which, of course, later my colleague Jun Shik is going to cover one in particular, namely oil. So these are the recent market developments that we've seen. So what we've seen is equity markets. They've recovered to a large extent. Volatility is generally close to normal. What we have on the left here is a chart of the equity market, these kind of broad-based index returns. And you can see that, in particular for Asia and Latin America, those blue and green lines, they've really recovered back to kind of where they were in 2007, if not slightly above. The European and American stock markets have recovered from their dips in the wake of the financial crisis, but they've not recovered all the way back to the kind of their pre-crisis levels. And on the right-hand chart, we see this measure called the VIX that kind of gives us a sense for the degree of risk aversion that is around in the economy. And although there's a lot of uncertainties right now, you can see from the VIX in the part towards the far right in this chart that the level of these measures is not nearly as high as it was at the time of the financial crisis, and is actually kind of back around the levels that we saw in the early 2000s. So we've seen these positive developments in equity markets, but credit growth in advanced economies still quite low. However, which is on the left chart here, in emerging market economies, it's actually quite buoyant. It's quite high. And this may be a source of concern going forward. It's also the case that we've seen that capital flows to emerging market economies, they recovered quite quickly after the crisis, and this is actually explored in a bit more detail in Chapter 4 of the current World Economic Outlook. But as we can see, they've slowed a bit since the fall of 2010. However, in more recent data, we see a little bit more of again, they're picking up again. What we see here are emerging market bond funds and emerging market equity funds, which are somewhat higher frequency than kind of the full capital flows data. So they give us a bit more of a window into the very recent past. And as you can see, they were quite high in the third quarter, but then kind of tailed off in the fourth quarter. But again, as I said, there's some evidence that they may be picking up again. The other thing is we've seen very high commodity prices, of course. Those prices have been boosted by structural factors, namely there's been a large increase, and we think this is going to continue for quite a while, in demand in Asia. But there's also been some cyclical factors behind this, and also some special factors. And the special factors in particular, of course, are related to what's been happening with food most recently in response to a variety of kind of weather-related supply shocks that we're hoping are going to, if weather patterns normalize, then these will moderate a bit, and that's what is being shown here in the projection period. That oil prices are also gonna come down a bit, but still remain quite high, in large part because of these structural factors going forward. Part of this, of course, is due to kind of the geopolitical uncertainty regarding the Middle East and North Africa. Here we see that oil demand is picking up. And also we can see that the big shift in who has oil demand over the past couple years is China, which is this orange component here. China and emerging and developing economies, they're really kind of big contributors to that rise. Then if we look at kind of what's been happening to inventories, part of the reason, the strength for the recent recovery has been that the inventory cycle was actually, the rebuilding of inventories was actually pretty robust. That's kind of, moderated a bit. We've kind of come back to down a bit, which is natural, because in part what's happening is there's a handoff to kind of more sustainable kind of sources of demand going forward. So what about the overall outlook? Well, this is kind of the slide that kind of has the summary for kind of what we see going on in the world. So basically it's a multi-speed recovery. We see that emerging market economies are going to remain having strong growth, about 6.5% over 2011-2012. We see advanced economies are going to have quite a bit lower than 6.5% growth. Still,